Hi, welcome back to the podcast. Today, I want to touch on a topic around when your bookkeeping support isn't enough and the signals that tell you you're ready for a controller or fractional CFO as a small and medium-sized business. So a lot of you, when you started your business, maybe chose to do your own bookkeeping or hire someone to do your bookkeeping for you, which is a great first step. And then your books are getting done, your taxes are getting filed, your invoices are going out, everything feels just right. But then something shifts. Maybe you land a big client or cash flow starts to feel confusing and you maybe brought a few employees into your company or added a few employees to your existing roster, and payroll makes your stomach hurt all of a sudden because it's just such high stakes now. Maybe you have some investor that's asking for financial projections for your business and you have no idea how to even create those. And maybe things are going great. Revenue is growing and climbing, which is a great positive indicator that your business is going to be doing more, but things feel less under control on the financial side. And what worked when you were smaller is no longer working at this next level, at this scale. So that feeling that you have about all of these areas and many more are an indication that you might need to consider different support for your business. So there are these moments when you start to grow your financial infrastructure or support, and you might want to consider different positions that are going to support you in different ways going forward to make those goals a reality. So often what I see as a fractional CFO for many businesses and many years now is that companies struggle with the growth because it happens unexpectedly and fast, and then they don't have the support system to be able to keep up with it. And the owner finds themselves in desperate need of support and they're turning to their existing team, but their existing team doesn't have the skill sets to be able to support them in that way. Let's talk about the financial support spectrum, which I cover in detail in our episode 19 for financial roles in your money support team explained, but I'm going to go through them briefly here to set the stage. Most founders already might have a bookkeeper on the team that's recording transactions, making sure things are categorized the right way. This is historical accuracy and compliance. You might have considered a financial analyst. If you don't know what this role is, I go more in depth in that episode, but essentially they're reviewing the data to gain insights, to give you information to make better decisions. Then there's a controller role, which is a little bit of that compliance to make sure financial reporting is accurate and timely. And also there's controls in place for how money is being managed, processes around payables, receivables, and so on. And then there's this CFO role or fractional CFO, which is the strategist. This is where we are helping you take those reports and that information and translating them into forward-looking decision-making for your business. And this is really key when it comes to wanting to access capital, when you want to grow your company, when you're trying to mitigate risk and have a leadership function on the financial side of your business that will unlock that next level of achievements for your growth with an action plan and really clear steps to take to achieve them. Now, we mentioned the bookkeepers recording what happened, the CFOs working on shaping what happens next. And that's really a key differentiation because if you're asking your bookkeeper to do this, they probably are going to say no, or like this is outside of the scope of support. And often this is what I see a lot of small, medium business size businesses do is they go to the bookkeeper, they go to the accountant asking for this level of support with the complexity. And they are being told no, or we don't have the bandwidth, or we can't help you. Or even worse, they're like, yeah, we can do that for you. And then they still don't deliver on those services because they just don't have maybe the right amount of time or the skill set, or they're overextended with too many clients. This is a no judgment zone, by the way. Like wherever you're at in the spectrum of what support you've gotten for your business is totally okay. We just want to outline what it can look like and what are some of the roles and functions you want to consider as your business continues to grow. The shift that most founders don't see coming, or business owners, when you start to ask questions on what happened, why is that higher than last month, or why did we spend double in this area, and nobody in your current team can answer those questions for you. Not only that, but also what happened and what does this mean for me going forward as the business continues to grow or shift or pivot or make decisions. So this is really key because this is where you start to take some of the data and turn it into action in order to make something different for an outcome or a change you want to see. And often I see a lot of small, medium-sized businesses quickly outgrow transactional accounting support or financial support because it's just foundational and it's not going to give you the insight or action taking piece that you're missing and craving all along by asking those questions. Like, can I afford to hire? Can I pay myself more? Can I invest in this thing? Do we have the cash to do that? And the function is going to go from like starting with a recording, going to interpreting the data now, to anticipating what might happen so we can act on it either before or after. So creating that forward-looking plan, it starts to shift your business into taking control of what's happening rather than waiting for it to happen to you, which is just such an important unlock that your business can use for this next stage of growth. And you want to make sure that you're using that finance support to not delay decisions because now you have the data, now you can make better decisions, now you know more. And so it's going to help you accelerate decision making. It's going to prevent cash surprises because you're no longer going to be guessing or looking at your bank account and hoping and praying things work out. You're going to actually look at your cash flow forecast instead for 13 weeks and know, okay, this is what's coming up. This is what's going to be left. And this is what I can afford to do. And let's move forward. You're no longer going to be in that reactive leadership. Instead, you're going to shift to this proactive approach, which really helps you feel more in control and understand better what's happening in your business. And going from transactional to like this next level of support where it's more insight data driven to make decisions, it's really about complexity, not about company size. And so your company size obviously will dictate how much support you might need, but the complexity starts to build up quickly, especially if you're opening a second location or you start to hire more employees. Depends on how many service and product lines you have, who you're selling to and how you're selling the channels. And if you're growing those, that's just going to bring more complexity to your business where the needs start to come in early on when you need this support to make sense of all of that. Because there's just more moving pieces. And that is totally okay to feel overwhelmed as a founder or owner. You feel like things are out of control and like it's grown beyond your own understanding or skill set on the finance side. And that is okay because you didn't go into business to be a finance analyst or CFO. You went into business to run the business as the CEO and have the CFO function support you and provide you this support and you cover the gap in it so that you can make better decisions and run faster as a CEO. Okay, so let's talk about what your numbers are trying to tell you because I find there's often this arbitrary thresholds where this inflection points might be happening often, but they can be, all over the place too. So a few signals to kind of keep an eye out for. And this, if this is you, make note of how many of this you are checking the box on. Revenues crossing meaningful thresholds, meaning, again, there's no magical number, but we see consistent six figures of monthly revenue, crossing a $1 or $2 million threshold. It just changes the nature of your financial management because there's just more happening and you might need support in those areas around this time. And also the stakes for mistakes are much higher. Yeah, you might have more wiggle room depending on how much profit you have, but the stakes are higher if you make a mistake. It could have more dire consequences or bigger impact to your business. And at this level, right, you're not just recording transactions anymore. You need to start using the data, interpreting them, and start to make decisions based on it. Okay, the second signal is you have multiple revenue streams, multiple entities, or multiple locations. This is where you're going to start to look at consolidating financial reporting, intercompany transactions, and cost allocation for each entity required to make sure things are nice and clean and financial reports actually mean something because now you have things in the right structure financially speaking. And that's just one example of how things start to get complex. You also want to look at profitability by location. You want to look at what are your margins, pricing, and all of these other areas by entity, by revenue stream. And this starts to cause a lot of questions that cannot be answered unless we're looking at the data and gaining those insights. Signal 3 is not all revenue is profitable. I talk about this a lot because sometimes we get really excited as funders to bring in a new line of service, a new product, and sometimes that doesn't have the highest profit margin and maybe something else you've been doing has the highest profit margin. So it's important that you start to evaluate the quality of the revenue that you're bringing into your business, not just the quantity. Because the quantity is easy, right? Like it looks exciting, like, oh, I brought this much in revenue for this service or product. product. But then we look at the bottom line, and then that service or product is not very profitable. So adding higher quality revenue is going to be important as you go through, but you need to analyze it to know which one that is. Signal number 4 is gross margin or profitability is moving, but you don't know why. So like really understanding that why behind it is going to be important, because sometimes we see revenue go up, but profit is flat. And then we start to ask a lot of questions on like, what is our cost structure? Did we hire too many people? Do we have too much overhead costs? Did our costs go up? Did we not increase the price? Like there's so many levers we can look to pull to understand how we got here and then what we want to do going forward, which is really important, the going forward piece, because we can correct things in the past and really accelerate a better path going forward if we can catch this early and adjust. So we want to make sure that 1, the data is accurate to start with, and then 2, that we're tracking the right data to be able to make these calculations, to then get the insights we need to then make better decisions and make the shift we want to see happen, so that we can then make sure profit and revenue are both growing at the same time. Now, the next signal is cash flow feels unpredictable despite solid sales. And this one, I see a lot of business owners struggle because it's a disconnect in their mind that revenue doesn't equal cash. And I go more into detail in other episodes about why revenue is not cash, but they are surprised with their cash position. They need forecasting but haven't done it. And forecasting is a CFO function. That is what we do for a living, is anticipating how much in sales we're going to receive, how much in cost do we have coming up, when is that going to happen, and the timing on when all that happens is so critical, because that is what impacts cash. And understand the cash flow needs upcoming before they're here, so we can decide, are we going to take on debt? Are we going to finance it from the business profits? Do we have cash reserves to cover that? And understand any gaps that we might have before we have them. Because once you have them, it's kind of late and you're going to scramble to find money. Versus if we know ahead of time, in 4 weeks, in 4 months, we might have a cash deficit. We can solve for that today to take action and get better at that. The next signal is you're making hiring, pricing, and investment decisions without modeling financially what that might look like. And this might feel like we think we can afford this? Question mark. It's not really a financial strategy. We should model it out with inputs and variables on what we think more likely be the case. Understand how pricing flows through the bottom line, and then make sure the investment decisions have a clear expected return on investment, ROI, before we go into them, so we can measure success with key metrics against it, and not just, again, guess our way through this or just throw money at it and then has nothing come back in return. Not to say every investment decision will be successful, but at least you have expectations going into it and you know when it's not going well. And that's why we put those on pen and paper, so we can then decide and see, are we tracking to the things we thought we were going to get for this investment? And same thing with pricing, right? Like coming out with pricing out of thin air rather than benchmarking, looking at what value we're bringing, how are we different, how we price structure, and what the structure needs to look like to fulfill the profitability goals is going to be key as we're modeling that out, financially speaking. Okay, the next signal is growing your team by hiring without clear productivity metrics. So we see a lot of inefficiencies where companies think, okay, we're growing, so we just need to hire more people. And we're like, what are you hiring them to do? What are the gaps? What is the org structure? What are the needs for those positions? Or could the current team handle some of the growth before we start to hire? If we're going to hire, what are their responsibilities and how much are they responsible for to drive efficiencies overall? And is this going to unlock a next level of capacity for us that allows us to do twice as much or like 30% more, but the cost is not going to be 30% more also. So just, again, thinking through the ins and outs of this is going to help us better navigate what comes next. Those are kind of like the signals that we often see are flagging a need for a CFO to step into the business to help answer all these questions. And that is our job, by the way, to answer all those questions through the financial analysis we do. And then these signals rarely appear all at once or all of them. It's really like maybe 1 or 2 here and there first, and then that can get you started on the conversation on whether or not you need a CFO in the team. And often we don't see all 7 of them show up at your door at the same time. And this is just a few examples of things that you can be watching out for. So if you check the box on more than 1 or 2, make sure you book a call on our website, wealthworthwithin.com, to chat more about your support needs and how I might be able to meet those. Okay, so the next piece on your business needs that flag the need for a CFO is really around growth signals when the business businesses are running that existing infrastructure in place. Okay, so I'm going to go through 5 growth signals as an example to just give you an idea. If you're looking to raise capital or take on debt. So we have a lot of our business owners are buying commercial properties, or they're taking out consolidation loans for whatever reason, or loans to be able to accelerate growth in the business. And what lenders are looking for, or investors are looking for in order to hand them this money, is an understanding of their EBITDA, earnings before interest, tax, depreciation, and amortization, and your burn rate. How much are you spending monthly on running your business? The expenses that you have, and the profit that you have, and the cash flow that you have in the business, because they want to know that you can afford to pay the loan back or the investor back or finance that purchase. And so if you're not clear on what your numbers are, this is going to be really hard to attain to accelerate that growth. Not to say you can't bootstrap your growth, but it's just going to be slower. Right? So if you are choosing to go this route, then you'll need some of the financials to be able to back that story and be able to convince lenders and investors to be able to give you some financing. You have employees and you're growing your team. So hiring is expensive. As you all know, payroll benefits, it just adds up really quickly. And an employee coming in doesn't right away produce at that level that you expect. So we need to have a certain period of time where we're allowing them to onboard before they fully contribute to the team. And then financing that is, part of it, because you're still paying them their paycheck, even if they're not performing at 100%. So we need to understand, what is the cost of that, this investment we're making on our employees, how many are we going to hire, when are we going to hire them? And then do we have the cash runway to support that? Because it will add up to your payroll before it adds up to your revenue or profit. So just being clear on that is really important as a growth signal. So the growth signal number 3 that we see often is preparing for sale, acquisition, or buying another business. And so if you're in that position as a business owner where you're growing and thinking, hey, I should just acquire another company to merge with mine to be able to grow faster, that is fantastic. That is one of the strategies we use with clients. Or maybe you're looking to one day sell your company. You need to make sure your finances are on point. And this doesn't, again, just happen because you want to sell. It happens through intentional work on crafting the financial story, making sure profits are at the right level and producing the outcomes that a buyer might want to see for your business. So this is the piece where preparing for that transaction, whichever one it is important, because if you want to qualify for financing to buy a business, your business has to be healthy first. If you're going to sell your business, your metrics need to be on point. And if you're going to merge with another company, some of the two need to be bigger and better results so that it's a mutually beneficial merger. Okay, so your 4th growth signal is your accountant on the team or your bookkeeper on the team is saying, I cannot advise you on that. This is a common one because good bookkeepers and accountants know their lane. And if they are not in the advisory side of services where they have the skill sets and experience to do it, they'll tell you, no, I'm not going to do that for you. And you need to go find a CFO. Ideally, that's the advice they're giving you, and they know to stay in their lane. They do really well at what they do, so they want to stay in that lane. And I think this is just in general a good indication of a good professional that knows what they can and cannot do and the distinctions between the different roles. Not to say accountants can be CFOs, there's a ton of those as well that I'm sure are skilled and experienced. We just have to make sure that if in your current team you don't have that function or expertise, that you're reaching out to the right person for support. Signal number 5 is you're expanding to new markets and you're exploring new market opportunities and potential. But before you make that decision, we want to make sure we're measuring to understand what the expansion might look like into those markets, set up some key performance indicators, KPIs, to understand how we might expect to perform in those markets. And this is definitely not bookkeeper territory, right? They're going to be like, this is beyond what I do. Don't ask me for help. Go find someone else who can help you. And if the goal is to grow, then you are already positioning yourself for CFO support needs, because that is what finance leadership does for your company. Is we're beyond the bookkeeping compliance piece, and now we're really into that financial leadership that keeps you competitive. And growth is one of the functions we help play in the support scope for our clients. Okay, let's talk about the leadership signals when the founders become the bottleneck and kind of how we shift out of that. So the first leadership signal I see is financial decisions are slow because they're all going through the founder or the business owner, like budget questions, vendor negotiations, pricing decisions, and the founder has no one else that has financial context to help support that. So that's a structure problem, not a workload problem that can be solved with an outsourced fractional CFO. The signal too is like they're in the weeds, in the details when they need to be focused on growth. So a lot of our founder conversations, we're trying to up level the conversation to the right metrics, to the right takeaways, not worried about the tiny details that don't make a difference. Like sometimes a lot of our founders get really caught up on, I did this expense and I don't know why it's so much higher. And we look at the total of their company and it's just completely immaterial. So we try to pull them out of that and say, hey, let's look at the bigger picture. In this areas is where we want to focus because it's actually driving more of the variance to what we expected than this small transaction that you're worried about. Sometimes it's bringing that perspective to the founder and really reframing the conversation around what's really important for the company's growth. And then if a leader doesn't have the financial CFO partner thought leader, they're going to find themselves looking at all this information, not really knowing what to do with it. And when deciding to make a major decision on a contract that requires an upfront investment, they don't know what to do, don't have someone to challenge their assumptions around something they're trying to achieve, and really think with them or in partnership and collaboration what the other side of the coin may look like, or the risks or the opportunities that they're missing, because they're just too in the business. And that is really what the finance function is meant to do, is bring in this perspective, this fresh approach, this third party objective to the conversation with finance expertise to make a better outcome happen. And then the fourth signal I see is the leadership team is making financial decisions without the financial grounding, where sales leaders or operations director, product team, they don't really have like a department budget or any kind of financial responsibility, and therefore is not tied to like the direct outcomes we want to see in the business. And so we want to make sure that you're not missing that business strategy and that you have a way to collect on receivables, a way for your leaders to be accountable to managing some portion of the budget if you're ready for that. This is a lot of the work that we do with department budget managers and really helping them understand the responsibility and managing to that. So the reason why there's a fractional CFO model and not like a full-time CFO only is because a lot of companies need this function earlier on and it becomes more affordable and the solution that will close those gaps that they are currently experiencing and painfully going through. So it's important that they consider that fractional CFO role and not to be scared by the affordability of it, because it's way more affordable than bringing in a full-time CFO to your team, which you probably don't need at this stage anyways. So we talked about KPI signals. What is your data telling you and what are you doing to translate that into decisions? Growth signals, there's things that are happening in your business that requires the finance leadership to come in and step in to support you. The leadership signals, where you personally become the constraint and let the financial clarity in your company to that next stage of growth. So pairing up with the CFO is going to help close those gaps. And honestly, half the time I see founders really need this and it becomes an urgent request when things are just not going well versus bringing in this function earlier on when the signals start to show up to prevent being in a dire situation. We've had clients reach out to us when they're running out of cash and can't make payroll by Friday. And then we have to really step in and help them get out of that, which is painful and hard, not impossible. But we just want to catch this before that's even the situation to make sure that we're not in this emergency fire drill having to step in, which we can do. So if you're in that situation, reach out because we're happy to help. But really just take 10 minutes this week, if you can, to go through this assessment, rewind the episode and go back to the ones that I cover on the signals so that you can see how many boxes you check. And if you are checking more than one or two boxes, then make sure you reach out and book a call with us. It's free to have a consultation with one of our CFOs to understand support gaps, needs, and how we might be able to help you. So if this episode was helpful to you, please share with another business owner who needs to hear this message that is maybe not even aware that a fractional CFO is an option and they're really craving this support level and can use some help in their journey to grow their business. Thank you for being here, for being a listener. I appreciate you, and I'll see you on next episode.